Welcome to Market Dive, where we go beyond those headlines you see and really dive deep into investment strategy.
Exactly.
I'm Kian.
I'm Nika.
And today, we're going to be diving deep into The Art of Execution, Mastering Investment Strategy by Freeman-Shor.
Yes.
And, you might be thinking, oh, another book about picking stocks, but this one's a little different.
Yeah, this one flips the script a little bit.
Yeah, it really challenges how we think about success when we're investing in the market.
Yeah, and you know what I really appreciate about this book is that it's based on real-world observations of top investors.
Yeah, so tell me a little bit about that. What did Freeman-Shor do to sort of set the scene for this book?
So he tracked the performance of a fund that was comprised of star investors' best ideas.
Oh, so the best of the best.
Exactly.
You would think that would just be a home run.
You would think so.
Yeah.
But get this, only 49% of the investments in the fund actually made money.
So less than half.
Less than half.
Even with the best stock pickers in the world.
Even the investing gurus were wrong more than half of the time.
Wow. So that really begs the question, if picking the right stocks isn't the magic formula, then what is?
That's the million-dollar question, and that's what Freeman-Shor really unpacks in his book.
Okay.
And it turns out the real differentiator, the secret sauce, is execution.
Okay.
It's not just about identifying winning stocks,
but
it's about having that strategy for managing your investments.
So what you do with the stock after you buy it.
Exactly, and how you manage both the winners and the losers.
Now, I know when people hear the word execution, they think oh, that's kind of boring.
Yeah.
But I think this is where it gets really, really interesting.
It does.
So Freeman-Shor talks about this idea of investor tribes.
Yes.
And he kind of observes that these top investors, even though they're all super successful, they fall into these categories based on how they manage their investments.
Exactly.
So tell me about these tribes.
So he calls these categories tribes, and he identifies 5 of them. So we have the rabbits, the assassins, the hunters, the raiders, and the connoisseurs.
Okay, so 5 distinct personalities in a way.
Exactly, and each of them has their own unique approach, their own strengths and weaknesses.
So I'm really curious to learn more about these tribes.
Yeah, and as we go through each one, I think you'll start to see yourself.
Oh, yeah.
And maybe even some of your past investment decisions in these descriptions.
Okay, so let's start with the rabbits. Tell me about those guys.
So these guys are all about inaction. They tend to freeze up when their investments start to go south.
Oh, so they just kind of hold on and hope for the best?
Yeah, they fall into what Freeman-Shor calls the capital impairment trap.
Okay.
Which is essentially just holding on to those losing positions for far too long, hoping that they will magically rebound.
Yeah. I think we've all been there.
We've all been there, and it's like watching a slow-motion train wreck.
It is so painful.
Yes, and it's driven not by logic, but by psychology.
Okay.
So, for example, the narrative fallacy.
Okay, I've heard of that one.
Yeah, it's where we cling to that initial story we told ourselves about the investment, even when the facts on the ground start to change.
Oh, so we get so attached to that initial idea that we just ignore all the warning signs.
Exactly. And then we have the endowment bias, which is this tendency to overvalue something simply because we own it.
It's like my precious.
Yes, exactly. And that can be really detrimental in investing.
Yeah. So how do we break free of these rabbit-like tendencies?
Well, thankfully, Freeman-Shor offers some practical advice.
Good.
One of the things he suggests is to pretend that you're looking at the investment for the first time.
Oh, I like that.
So just hit the reset button on your emotional attachment and ask yourself, if I had no prior investment in this company, would I buy it today knowing what I know now?
That's a great question.
And it can really help you cut through the noise.
Yeah.
The other thing is to have that predefined plan of action before you even make that investment.
So know your exit points.
Yeah. Exactly. Decide what your exit points will be, what your stop loss orders will be.
Don't wait until it's an emergency.
Exactly. Don't wait until you're in the midst of a market meltdown.
So have a plan going in.
Exactly.
All right, great advice.
Yeah.
I think we've all been rabbits at some point.
Probably.
So let's move on to the assassins.
Okay, so the assassins are all about action.
Okay, so the opposite end of the spectrum.
Yeah, these guys are the masters of damage control.
Yeah.
They're really laser focused on preserving capital.
Okay.
And they're not afraid to cut their losses quickly.
Okay, so they're not going to let that stock just bleed out.
Exactly.
They're going to get out.
They're going to get out.
Okay.
Yeah.
I think that takes some serious discipline.
It does. It really does.
Yeah, so tell me a little bit more about their approach. How do they do this?
So they're incredibly disciplined. They use stop-loss orders to automatically sell a stock when it reaches a certain price point.
Okay, so it takes the emotion out of it.
Exactly. And they also have fixed time frames for their investments. So if the stock isn't performing within a certain period, they're out of there.
Wow, so no matter what.
No matter what.
Okay.
They're not swayed by their hopes or their expectations.
They're just sticking to the plan.
Sticking to the plan.
Interesting.
No.
Okay, so the assassins are all about damage control. They're cutting their losses quickly and they're moving on.
Exactly.
Okay, so who's next on our tribal tour?
Okay. Let's talk about the hunters.
Okay, the hunters.
So these guys are the ones who double down when everyone else is running for the hills.
Okay, so they're a little bit contrarian.
A little bit.
But they're not just blindly throwing more money at a losing investment, right?
No, they're incredibly selective.
Okay.
They only double down when they're absolutely convinced that the market has it wrong.
Okay, so they had to have really strong conviction in their initial thesis.
Yeah, and they need to be really disciplined as well.
Okay.
So they set limits, they manage their risks, and they're never afraid to walk away if the situation changes.
So it sounds like they're constantly reassessing the situation.
Exactly, and they're not afraid to admit when they're wrong and change course.
Okay, so they're brave, but they're not reckless.
Yeah, I think that's a good way to put it.
All right, so we've covered the rabbits, the assassins, the hunters. Who else do we have?
Let's talk about the raiders.
Oh,
So these are the investors who are always chasing the quick wins. They're always on the lookout for the next big score.
Okay, so they're constantly buying and selling.
Exactly, and that's actually their downfall.
How so?
They tend to sell their winners too early.
Oh, interesting.
They get so focused on locking in those short-term gains that they miss out on the potential for those investments to really compound and grow over time.
They're missing the big picture.
Exactly.
It's like they're snatching up those little nuggets of gold, but they're missing the whole treasure chest.
Exactly, and it all comes down to fear.
Okay.
They're afraid of the market turning against them, so they sell as soon as they see a decent profit.
So they're playing it too safe.
Yeah, and in doing so, they're limiting their potential.
Right. So it's like that fear is actually holding them back.
Exactly.
Okay, so how do you overcome that raider mentality?
So it comes down to having conviction in your investments, believing in the companies that you're buying,
Yeah.
trusting your research, and being willing to ride out those market fluctuations.
So shifting that focus from the short term to the long term.
Exactly.
Okay. All right, so that's the raiders always looking for that quick win, but sometimes selling themselves short.
Right.
Okay, so we've got one more tribe to cover. Who's left?
The connoisseurs.
Okay. The connoisseurs. I like the sound of these guys already.
They are pretty impressive.
Yeah.
They really understand the power of long-term investing. They're not swayed by the short-term market noise.
Okay.
They're focused on the big picture.
So they're like the Zen masters of the investing world.
You could say that they're
Yeah.
able to detach themselves from that emotional roller coaster and just focus on the fundamentals.
So how do they develop that level of conviction?
It really comes down to research and due diligence.
Okay.
They don't just jump on the latest bandwagon.
All right.
They take the time to understand the businesses they're investing in.
They do their homework.
They do their homework.
Okay.
They look at the financials. They study the industry trends. They talk to management. And they build a case for why a particular company is a good long-term bet.
They're not just buying stocks, they're buying businesses.
Exactly. And they're becoming part owners.
Yeah.
And they're committed to seeing those businesses succeed.
Okay, so it's really about trusting the process and understanding that the market's going to go up and down.
Right.
But over time, quality companies will prevail.
Exactly.
Okay, so we've met all 5 tribes.
We have.
The rabbits, the assassins, the hunters, the raiders, and the connoisseurs.
That's right.
It's amazing to see how those different approaches can lead to such different outcomes.
Absolutely. And remember, these aren't rigid categories. You might find that you exhibit traits from multiple tribes at different points in your journey.
Yeah, I could definitely see that.
The key is to be self-aware, to recognize your own tendencies and develop a plan that plays to your strengths.
And mitigates your weaknesses.
Exactly.
I love that.
Right.
All right, so we've laid the groundwork. We've explored these investor tribes. And I think it's a really interesting way to think about how we approach the market.
Absolutely.
So now I want to talk about the practical takeaways from the book.
Yes.
So in the next segment, we'll be unpacking those winners and losers checklists.
I'm excited for that.
Me too. I think that's where the rubber really meets the road, and we can take all this interesting information and apply it to our own portfolios.
Absolutely.
So stay tuned. We'll be right back. So we've explored these 5 investor tribes and their unique approaches to the market.
Yeah.
But now I want to talk about how we can actually put these insights into action. Because yeah, it's all interesting to talk about the tribes and all, but like, how do we actually use this information to become better investors?
Right, that's the whole point.
Exactly.
Yeah.
So that's where I think Freeman-Shor's winners and losers checklists come in.
Yes.
I think these checklists are just brilliant because they distill all of these like complex ideas and strategies into these like really clear, actionable steps.
It's like a roadmap.
Yeah, exactly.
Yeah.
So let's start with the winner's checklist. Like, what are the habits, the key traits that separate those top performers from everybody else?
So the first item on that checklist is focus.
Okay.
Successful investors concentrate their capital on their best ideas.
Okay.
So they're not trying to be all things to all stocks.
So no more spreading ourselves too thin, chasing every hot tip.
Exactly. It's about having the discipline to say no.
Yeah, to those like shiny objects that are tempting,
Exactly.
but might distract us from our main goals.
Right.
Okay, so focus number 1. Got it.
Number 2 is position size. So it's not just about picking the right stocks. It's about allocating enough capital to those winners so that they can really move the needle on your overall returns.
You're saying like if you have a really high conviction idea,
Yeah.
you got to put some money behind it.
You got to put some money behind it.
You can't just like dip your toe in the water.
Exactly.
Okay, that makes sense.
Yeah.
So number 3.
Number 3 is be greedy when winning.
I love that one.
Yes.
That's like my favorite investing quote.
That's a good one.
So this is where we see those connoisseurs really shine. They have the patience and the discipline to let those winners run.
Exactly. They're not selling too early.
Yeah.
They understand that compounding is where the real magic happens.
It's hard, though,
It is hard.
to not like lock in those profits when you see them.
It is.
Okay. So be greedy when winning.
Yes. And then we have adapt materially when losing.
Okay. So that's where those assassins and those hunters come in.
Exactly. They understand that recognizing and reacting to losses is just as important as capitalizing on wins.
So it's not just about picking winners.
Yeah.
It's about knowing what to do when you're wrong
Exactly.
and adjusting accordingly.
Yes.
Okay. And then the final point on the winner's checklist.
Is liquidity.
Okay.
Always invest in stocks that you can easily buy or sell.
So don't get trapped in those illiquid investments.
Exactly, because that can really tie up your capital.
Yeah, and limit your options,
Yes.
especially in those volatile markets.
Yes.
Okay, so we've covered the winner's checklist. Now, let's talk about the flip side, the loser's checklist.
Okay.
These are the habits, the pitfalls we need to avoid at all costs.
Yes.
So what are those investing sins that we've all probably committed at some point?
Well, the first one is no surprise. It's the opposite of focus investing in too many ideas.
Spreading yourself too thin.
Exactly.
Yeah, okay, I'm guilty of that one.
And when you spread your capital too thin, you really dilute your potential returns.
And it makes it harder to really capitalize on those big winners.
Right. It's like trying to juggle too many balls at once.
Yeah. Yeah, you're going to drop something. You're going to drop something.
Okay, so number 2.
Investing small amounts in each idea.
So basically, like, not having the conviction to really go big.
Exactly. Even if you pick a big winner, if you're only putting a tiny bit of money in,
It's not going to make a difference.
it's not going to move the needle.
Yeah. Okay, number 3.
Taking small profits.
The classic raider mistake.
Exactly.
Yeah. Okay, so you're saying they're selling those winners too early?
Yes. They're so afraid of losing their gains that they sell as soon as they see a little green.
But as we talked about before, that short-term thinking can really sabotage your long-term growth.
Exactly.
So you're saying it's like picking the fruit before it's ripe.
Exactly. You're missing out on the full flavor.
Okay, what's number 4?
Refusing to adapt when losing.
Oh, the rabbits.
The rabbits. This is where that paralysis kicks in,
Yeah.
and they just watch their investments dwindle away.
Yeah, they just hope it'll go back up.
Exactly.
It's tough.
It is.
Okay, so number 5.
Ignoring liquidity. Ah, yes. This can be a real trap.
Especially for investors who are drawn to those more obscure assets.
Yeah.
Those investments that seem exciting,
Uh-huh.
but can be really difficult to exit when you need to.
It's like venturing into uncharted territory without a map.
Exactly. You might find treasure.
Or you might get lost.
Or you might get lost.
Okay, so there you have it. The winner's checklist and the loser's checklist.
Mhm.
2 really simple but powerful frameworks, I think, for just improving your execution
Absolutely.
as an investor.
Yeah,
I love how clear and actionable these checklists are.
me too.
They really take all those like complex ideas about the tribes and turn them into something that we can actually use.
Yes,
Yeah.
exactly.
So now the key to using these checklists is to figure out which tribe you are.
Right.
Like, which tribe do you most closely resemble?
Exactly.
Once you know that, then you can start to, like, leverage your strengths and mitigate your weaknesses.
Right.
So we encourage you to think about your past investment decisions.
Yep.
How do you typically react to market fluctuations?
Well,
Which tribe do you see yourself in?
right.
And then, more importantly, which habits from that winner's checklist can you start incorporating into your strategy like today?
Exactly.
Because, successful investing, it's a journey.
It is.
It's not a destination.
It's not a sprint. It's a marathon.
Yeah, exactly. And the art of execution really gives us the tools to navigate that journey
Absolutely.
with, I think, more confidence and more skill.
Yes, and to be more intentional about it.
Exactly. It's about understanding ourselves,
Yeah.
understanding the market, and just like mastering that art of turning those brilliant stock picks into like lasting portfolio gains.
Exactly.
Okay, so we've unpacked those winners and losers checklists, and I think they're really helpful for thinking about how we can improve our investing.
Yeah, absolutely.
But even with the best strategies in place, even if we're following these checklists to a T, the market's going to throw us some curveballs.
Oh, for sure. There's always going to be some uncertainty. There's always going to be risk.
Yeah, and I think that's kind of what makes investing so interesting.
Absolutely.
It's like it's a constant challenge, right? It's a constant opportunity to learn, to grow.
It definitely keeps you on your toes.
Yeah, and I think the art of execution really like empowers us to kind of embrace that challenge.
Yeah, it gives us that framework for making more informed, more strategic decisions.
Exactly. It's not just about what to do, but like why we're doing it.
Right, and when you understand the why, you're less likely to panic when things get a little crazy.
Yeah, you're more likely to stick to the plan.
Exactly.
Trust your research and, ride out those inevitable storms.
Absolutely.
So it's really about having that long-term vision and that belief in your strategy.
Yes.
So I guess the key takeaway here is that successful investing is not just about luck. It's not about intuition.
Yeah.
It's about having a process, a system, a set of guiding principles that you can rely on even when you know the market throws you a curveball.
It takes the emotion out of it.
Yeah, and the beautiful thing is I think that anyone can master this art.
Absolutely.
It's not about being a genius or having some sort of insider information.
It's about discipline. It's about self-awareness.
Yeah, and being willing to learn from those mistakes.
Exactly, and it's a journey.
It is.
And like any journey, it requires patience, perseverance, and a willingness to adapt along the way.
I love that.
Yeah.
So as we wrap up this deep dive into the art of execution, I want to leave you with a challenge.
Okay.
Think about your own investing journey.
Uh-huh.
What are your strengths? What are your weaknesses? Which tribe do you most identify with?
Yeah.
And then most importantly, what one change can you make today to improve your execution?
Absolutely.
Maybe it's setting those stop-loss orders.
Yeah.
Maybe it's doing more research before you invest. Maybe it's since having the courage to let your winners run.
Yeah, those are all great ideas.
Whatever it is, take that step today and start mastering the art of execution.
I love it.
Because remember, the real treasure isn't in finding the right stock. It's in knowing what to do with it once you've found it.
Couldn't have said it better myself.
Until next time, happy investing.